evening, traders from each and every part of the world that you are joining this call of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global market to access various financial assets. Now, today being on the first day of the fourth month of 2025, we are closely getting into the last weeks of the first quarter of the year, and we could all agree on one thing: the market has not been lacking volatility. We have been having volatility, we have been having volume in many days than not. And this is what we traders like to see, because volatility and volume, which is placed as time against price, gives us impetus and reasons to get into the market, to dive in speculated market direction, and that is how we make progress. But before we dive right into it, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free time by visiting HFM Kenya on YouTube. Just search HFM Kenya. Once you search HFM Kenya, kindly like, subscribe, and click on the notification button, and also share. This will improve our algorithms to alert us on key areas of producing content of educative nature, and that will find our mutual goal of bridging educational gaps for better trading decision, better investment decision, and that will take us a step forward. So I'll give a 5-second moment of silence for us to do that. With that out of the way, we'll move forward to discussing this week's high impact news, and the news that are going to move the market either in the continuation of market direction that we have been experiencing in the previous weeks and months from a high deal time frame, or as all high impact news that is going to possibly change that trajectory of market direction. And we begin with Euro news, which has come out in the morning. Consumer price index from Germany. Remember, Germany is a front runner in the euro. Euro is the medium of exchange in Europe. 20 countries using one currency, and you see German euro printed CPI month on month, printed as expected, so not so much market direction in that regard. As we walk into today, which is the 1st of April 2025, we see we have quite a myriad of high impact news, but all eyes will be concentrated on two major things. One, tariff news, the update by the Donald Trump administration on the implementation of taxes on certain importation targeted to certain countries like Canada, China, and some countries in Europe in regards to automobiles, that those are vehicles imported from Europe to United States. And the second category is going to be labor data. And labor data that I'm speaking about is ADP, automatic data processing, which shows us the number of people employed in the private sector. Will it be high? Will it be low? If it's going to be high, that is good for the economy, slightly strengthening the dollar. If that is reflected on Friday's non-farmers payroll that we are all waiting for, the NFP, if the numbers come out high, strengthen the dollar. If that is challenged, it's going also to weaken the dollar, medium and short term and medium, as we anticipate other high impact news to support this narrative or possibly change it. In other parts of the world, we have unemployment rate coming out from Canada. Also be anticipating that. We also have to monitor Chinese news, because Chinese news, as much as we do not regard the medium of exchange in China as an asset attractive to retail traders and investors, we would like to monitor what they are doing so that we could anticipate the reaction of what I would love to call partners who might not necessarily go with the trade policies of Chinese good example is the United States. You'll observe this as time proceeds. We also have high impact news from Euro as a region. We're also going to be monitoring that. And with that regard, let's dive into the charts to see what has been happening. Beginning with stocks. Let's begin today with stocks. We have been having quite a unique scenario. America stocks. Nasdaq or US 100, composed of majority tech companies, has been bearish, and this is taking out major lows, reacting from key areas of interest. You could see there is somewhat reaction from this area. Perhaps I could draw it. Every time price attempts to get there, it's either rejected or bounces off to react from. We have this reaction, fundamentally speaking, the tariffs or taxes imposed on certain imports by the United States on targeted on certain countries. A good example would be Canada. Is sending a shockwave in the stock markets, which is giving us a roller coaster. We do not know which particular direction to take, and this would be considered a risk-on approach asset for those who like trading indices. They would hesitate to jump in for the trades, to have running trades on this particular asset. And it's a likely scenario that we are going to see also on S&P 500, which actually even gives us a much more broader aspect of the United States economy in regards to stocks. These are major stocks and also penny stocks. Would like to have a much more precise direction based on fundamental analysis. And remember, we have defined on this series, Time Without Numbers, that fundamental analysis is the study of economic and geopolitical forces moving the financial markets. We are not really optimistic in regards to stocks because today we are moving bullish, the other day we are moving bearish. Would want a much more solid direction. I believe economic pundits from the United States are also concerned about this particular situation that we are in. In this week, we are going to get update on tariffs, and that could be the major concern why the stocks are not giving us the much needed market direction, and then we possibly see how to move around with that. For US oil, we have reached the area of interest here. We've been creating higher highs and higher lows, bouncing off from this area of interest. We want to see how price reacts from this area of interest. If we see rejection and price from a lower time frame starts creating lower low, we would consider getting in for shorts, because we remember the long-term approach of the oil producing countries is to lower the prices of oil. Why is this? So that countries producing oil that are not in line with these joint policies, a good example being Russia, can lack funds to proceed with the military invasion happening in Eastern Europe. However, monitoring geopolitical events that are happening, for example, the weekend before the one we just concluded, we had the Donald Trump administration visit the United Arab Emirates, or Dubai, if you may like, which is a leader in oil producing countries, or the OPEC, and promising to invest in stocks. This might also have come with other preconditions to which might adjust the prices of oil, preconditions that we are not alive to, which will possibly come to fruition into the days to come. So we would be patient on this particular asset. Remember, it is important to be patient in the financial markets, because once you're patient, setups which appear in key areas gives you much more needed high risk to reward, which gives some sense of guarantee of returns over a period of time. Off to European stocks, German 40. again reacting from the key of area of interest that it reacted from weeks behind, and now price is attempting to print on the upside. And this is German 40. This is an index basket of stocks, ETFs if you may like, which is 40 companies in the German state. They have been performing quite bullish. Perhaps the most optimistic, the most bullish stocks that we have had in major stock exchange ranked as high in the global markets. A long position on this asset would be considered risk off, and short positions would be considered risk on. The reason is when you go for long position, which means buying, you are agreeing to the long-term narrative, which is bullish. And remember, the German state just concluded elections on the 25th of February, and we have a new government in place. Remember, it was a flip election, and so that government is still attempting to implement the promises and the social contract they had with the people. Overall, it is seen as an optimistic administration to the well-being of stocks. This is the Christian Union Party, and is also seen as pro-citizen. So a balance of both corporate and also pro-citizen, and a thin line to draw, but we would be monitoring it to see how this proceeds. Would want to see it print out higher highs and higher lows to reflect investors' confidence in that particular regard. On to gold. Gold keeps on making higher highs, and I believe if I go to a lower time frame, slightly lower than the daily, perhaps the 4 hours, would see that we're still printing higher highs, taking out areas of interest. Now remember, gold has never printed this high. Would for those of us who would want to jump in for the long positions, would wait for retracement on lower time frame to get to certain areas of interest. Perhaps I would go to much more lower time frame to see how this would. See, it's easy to draw this area of interest if you understand the principle of 3 or more touches in the direction of the trend. Price attempts to be reacting from it, creating higher highs and higher lows. If this has left you, wait for retracement so that you buy when it's low and you sell when it's high, for you to realize potential high risk to reward. If this is your first time to interact with the financial markets, perhaps you have heard me mention jargons or terms that not familiar with you. You no need to worry. Kindly attempt to get to your mentor who has led you to this chat box through their social media handles to help you open an account with HFM, which is absolutely free to open an account. Once you get to the investment stage, they will advise to that regard. In the meantime, you could also visit hfm.com, attempt to register for an account, which will have you fill in details, and our experts will get in touch with you to proceed with the registration. As a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It is important to do your due diligence and observe proper risk management. With that, see you tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless and take care.